Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is July 10 and we're starting from the majors, euro-dollar pair and pound-sterling dollar pair. Evangelos Poulakis describes us pivot points. At the end of the last week, buyers of euro-dollar pair implemented confirmation of the rebound from the accumulation of supports, breaking the correction trend line. As a result, the nearest bullish targets are now at the highs of 1.1012 and 1.1096. The bearish targets maintained their value with the opening of the new week, and the support zone still retains an accumulation of various levels, spanning a wide front of 1.0901, 1.0875, 1.0866, 1.0824, 1.0807, and 1.0799. On the lower timeframes, the advantage belongs to the bulls, with the formation of new highs and continuation of the ascent. The resistance levels of the classic pivot points 1.1004, 1.1042, and 1.1110 will serve as intraday targets. If the corrective phase decline persists, the most significant value will be the breakdown of key levels and a reliable consolidation below them. This could change the current balance of power and bring back bearish sentiments to the market. The key levels on lower timeframes today are located at 1.0936, central pivot point of the day, and 1.0898, weekly long-term trend. On Friday, bullish players of GBPUSD continued their ascent and reached a June high of 1.2847. This has laid the groundwork for further strengthening of bullish sentiment. The prospects for the upward movement in the current situation encounter resistance from the monthly Ichimoku cloud, which its boundary is currently at 1.2893 and 1.3142. It's also worth noting that another monthly level, 1.2760, exerts its influence on the market, forming the nearest support zone together with the daily short-term trend 1.2719. After reaching a new high on lower timeframes, a downward correction is forming and developing. Bears have descended to test the support of the central pivot point 1.2803 and are testing its strength. Next, they will encounter the most important support, the weekly long-term trend 1.2731, which determines the current balance of power on lower timeframes. A break and reversal of the moving average will contribute to the transformation of the correction into a trend movement, thereby strengthening the possibilities for bearish players. Intermediate support may come from 1.2757, and further intraday targets in case of a break of the weekly long-term trend will be 1.2680 and 1.2634. And finally, here's Laurie Bailey with USD GBPY pair focused. Let's have a look. The long-awaited divergence on the daily chart of the USD GBPY pair has been formed. The pair fell by 257 pips on Thursday and Friday. It broke through the support level of 142.70 and 142.30. This morning, the pair returned above 142.30. It may try to rise 142.70. This scenario looks likely given a decrease in Japan's surplus, which amounted to 1.7 trillion yen in May versus 1.9 trillion in April. Pivot levels are rather strong. To break through 143.80, the price has been consolidating for 6 days in a row in a narrow range. Now, it's unable to grow due to the strong resistance levels of 142.70 and 143.20. The support level is located at 141.55. So the pair could enter a new wide range of 141.55 and 143.20. On the 4-hour chart, the price declined below the indicator lines, the balance line, and the MACD line. There may be an upward movement to these lines. The price may also slide into the sideways channel. If so, it will be easier for the pair to reach these levels. The Marlin oscillator went up sharply when approaching the oversold zone. The short-term outlook remains foggy. Traders need to wait for new signals. That's all for today. See you online soon. Good luck.